Welcome to XRP Pro Ledger, and today we are covering one of the most loaded and consequential XRP updates we have had in months, because when you line up everything that just dropped in a single sitting, the picture that emerges is not a bull market story, it is a global infrastructure story. And the price projections attached to that infrastructure story are going to make a lot of people very uncomfortable with the size of their current bags. 60% of Swift's banks now use Ripple solutions. Global banking giants are integrating Swift and Ripple together. Industry observers are on record saying that Swift and Ripple have moved beyond competition into building a shared future focused on speed and interoperability. American Airlines just confirmed that Ripple Treasury has exceeded their expectations. Russia passed a crypto bill in its first reading allowing digital assets in foreign trade settlements. And a detailed pricing analysis from multiple credible sources is now projecting XRP at $500 plus before 2035, with serious arguments for why that timeline compresses to 2028 or earlier. This is not clickbait, this is the data, and we are going to go through every piece of it right now. Let us start with the Swift and Ripple convergence, because this is the story that most people in the crypto space have been framing incorrectly for years, and getting it right changes everything about how you understand XRP's actual role in the global financial system. Swift is a messaging system. That is what it has always been, and that is what it will always be. When a bank in New York sends money to a bank in Tokyo, Swift sends the message that tells both banks what transaction is happening. But Swift does not move the money itself. The actual settlement of that value happens through a separate system of correspondent banking relationships, Nostro and Vostro accounts, and multi-day clearing processes that are slow, expensive, and capital inefficient. ISO 20022 was the messaging upgrade that made Swift's communication standards more sophisticated and more compatible with digital asset integration. What it did not do was solve the settlement problem. Ripple solves the settlement problem. And when 60% of Swift's banks are now running Ripple solutions, the infrastructure story is no longer about whether Ripple will replace Swift. It is about how Ripple's settlement layer and Swift's messaging layer are being integrated into a hybrid system that serves both institutions simultaneously. The Nostro and Vostro account liberation story is the financial mechanism that most retail XRP holders have heard about, but very few have fully internalized in terms of the actual dollar scale involved. Right now, banks around the world maintain Nostro and Vostro accounts, pre-funded currency pools held in foreign banks, as the mechanism for facilitating cross-border settlement. These accounts exist because the current correspondent banking system is too slow to settle transactions in real time, so banks pre-fund accounts in foreign currencies to enable faster local settlement on their behalf. The total value locked in these accounts globally is estimated in the trillions of dollars capital that is sitting idle earning minimal returns solely because the settlement infrastructure requires it to be there as a buffer against slow processing times. When XRP and the XRP ledger replace the need for those pre-funded accounts by providing instant cross-border settlement in 3 to 5 seconds, that trapped capital comes back to the banks. The banks have enormous financial incentive to make this transition happen as fast as possible, and that incentive is one of the most powerful forces driving institutional XRP adoption that never gets enough attention in retail market commentary. The Federal Reserve Access Dimension adds a domestic layer to the global Swift story that is equally significant for understanding XRP's institutional trajectory in the United States specifically. Ripple and XRP could gain direct access to FedNow and Fedwire as early as Q2 to Q3 of 2026. And for anyone who has been following this channel, you already know that Ripple has been building toward exactly this outcome through its money transmitter license network across the United States. Those money transmitter licenses were never just about regulatory compliance, they were the domestic rail infrastructure that positions Ripple to integrate directly with the Federal Reserve's payment systems when the regulatory framework allows. FedNow expanding to over 1,700 institutions by April 2026 is the demand side of the equation. Ripple's money transmitter license network is the supply side. When those two systems connect, XRP becomes not just an international settlement asset, but a domestic payment rail operating inside the Federal Reserve's own infrastructure, and that is a positioning that no other digital asset has built the legal foundation to achieve. The Russia development is the geopolitical wildcard that most Western-focused crypto analysts are systematically missing, and understanding it requires appreciating the specific trust problem that BRICS nations face when trying to build a multi-country payment system. India does not fully trust Russia. Russia does not fully trust China. China does not fully trust Brazil. When you are building a cross-border payment infrastructure for nations that have deep historical and geopolitical reasons to distrust each other's financial systems, you need a neutral trust layer, a bridge asset that is not issued by any of the participating countries and does not carry any nation's sovereign credit risk. The Bank of Russia tested Ripple's platform back in 2018 for cross-border settlements. A 2020 academic paper from Southern Federal University specifically analyzed XRP's potential as a payment currency bridge in the Russian context. And now in 2026, Russia has passed a crypto bill in its first reading allowing digital assets in foreign trade settlements. The BIS project, mBridge liquidity pool architecture, the framework being built for BRICS cross-border settlement, is designed for exactly the kind of neutral bridge asset that XRP provides. When India, Russia, China, and Brazil need to settle value between each other without trusting each other's currencies, they are going to need something neutral. XRP was built to be that something. The integration wave that XRP is currently experiencing across platforms, payment providers, and exchanges is the commercial velocity indicator that connects the institutional infrastructure story to the near-term market reality. Rakuten adding XRP payments, trading, and loyalty conversion for 44 million plus users in Japan. Exodus, BKA, and Binance expanding XRP ledger support with RLUSD transfers and liquidity tools. Validator signals pointing to XRP being pushed front and center ahead of the next market cycle. These are not isolated announcements, they are the final pieces of a massive rail system coming together simultaneously. Every new integration is another on-ramp for value that will flow through XRP when the switch gets flipped and the full institutional deployment goes live. The announcements are happening almost every day now, and the pace of integration is itself a signal about the institutional confidence in XRP's regulatory status and technical readiness. You do not build this kind of ecosystem around an asset you expect to fail regulatory scrutiny or lose institutional support. American Airlines confirming that Ripple Treasury has exceeded the expectations is the corporate deployment validation that closes the loop on the enterprise adoption story in the most concrete and commercially significant way possible. American Airlines is one of the largest corporations in the United States, managing treasury operations across dozens of currencies, thousands of counterparties, and billions of dollars in daily financial flows. Before Ripple Treasury, American Airlines was using disconnected systems and multiple bank portals that created friction, inefficiency, and cost at every point in the treasury management process. Ripple Treasury, formerly G Treasury, acquired by Ripple last year, replaced all of that with a single unified solution that connects to approximately 13,000 banks globally and integrates directly with firms like Goldman Sachs and JP Morgan. When the treasury team of a Fortune 50 airline says a product has exceeded their expectations, they are not giving a marketing testimonial. They are reporting an operational outcome that their CFO has reviewed and validated. Ripple Treasury connected to 13,000 banks globally and already exceeding expectations at American Airlines is the commercial proof of concept that every other corporate treasury evaluating Ripple solutions now has as a reference point. Now let us get into the price projection conversation, because this is the part of the video where I need you to separate the credible model-based analysis from the speculative noise, and the analysis we are covering today is model-based in a way that deserves serious engagement. The projection framework from Vincent Van Code maps XRP's price trajectory as follows: $6 to $10 in 2026, $15 to $30 in 2027, $35 to $70 in 2028, $60 to $100 in 2029, and $500 plus by 2035. The framework from Tucrium CEO puts the legitimate pricing model range between $5 and $4,300 based on comprehensive utility and market cap analysis. And Michael Arrington, TechCrunch founder and one of Silicon Valley's most respected technology investors, has publicly stated that XRP has no upper limit if Ripple continues to execute. These are not random social media price targets. These are projections built on utility-run mechanics. The idea that once XRP enters a sustained period of genuine institutional utility usage, the tokenomics of moving real-world value through XRP create a demand dynamic that is fundamentally different from speculative retail market cycles. The utility-run concept is the key to understanding why the price trajectory these models are projecting looks so different from the boom and bust cycles that crypto markets have historically produced, and why the people who understand it are not panicking about daily price movements between $1.40 and $1.50. In a speculative cycle, prices go up because retail investors expect them to go up and they crash when that expectation reverses. In a utility run, prices go up because the actual transactional demand for the asset is increasing as more real-world value flows through it, and that demand does not reverse because the utility that creates it is structural rather than sentiment-driven. When banks are settling cross-border transactions through XRP, when corporate treasuries are managing multi-currency flows through Ripple Treasury, when BRICS nations are using XRP as a neutral trust layer for inter-country settlements, the demand for XRP is being generated by operational necessity rather than investor psychology. That is a fundamentally more durable demand driver, and it is why the long-term price projections from serious analysts look so different from cycle-based crypto price targets. The Bitcoin comparison conversation needs to be addressed honestly because it is one of the most important and most misunderstood dynamics in the entire digital asset space right now. Bitcoin's market cap at $79,000 means that XRP needs to reach only $1,659 to have an equal market cap to Bitcoin at current levels, a ratio of 1 to 4,762. Bitcoin is mathematically subject to the law of diminishing returns. Each successive cycle produces a smaller percentage gain than the previous one simply because the base market cap is so much larger. XRP, operating from a lower base with an institutional utility run as the primary catalyst rather than speculative retail demand, has the mathematical runway for percentage gains that Bitcoin simply cannot replicate at its current size. And here is the retail psychology point that is going to matter enormously as this cycle develops. Retail investors who are new to crypto in 2026 and 2027 are not going to look at a $200,000 Bitcoin and see an opportunity. They are going to look at a $20 XRP with a coherent institutional utility story and see exactly the same narrative that drove Bitcoin adoption a decade earlier. When XRP flips Bitcoin's market cap, the retail FOMO that follows is going to be unlike anything this market has ever seen. The quantum computing threat to Bitcoin is a developing risk factor that is becoming increasingly difficult for serious institutional analysts to dismiss, and its intersection with Ripple's post-quantum cryptographic upgrade program creates a competitive differentiation that is going to matter more in institutional decision-making over the next 24 to 36 months. Bitcoin's cryptographic security model is based on elliptic curve cryptography that is theoretically vulnerable to sufficiently powerful quantum computers, and the timeline for quantum computing reaching cryptographically relevant capability is being revised shorter by institutional research teams with access to hardware development data that is not publicly available. The concerns around Tether's reserve quality, the emerging connections between Bitcoin's origins and NSA cryptography research, and the quantum computing timeline compression are all narratives that are not creating immediate market impact today, but are building the foundation for a large-scale institutional reassessment of Bitcoin's long-term security profile. Ripple's four-phase quantum resistance roadmap with Phase 2 actively testing NIST-approved algorithms is the proactive institutional response to exactly this risk, and the institutions making 10-year infrastructure commitments today are factoring the quantum timeline into their asset selection decisions. The complete picture that all of these developments paint together is one that requires you to zoom out from the daily price chart and look at the infrastructure that is being assembled around XRP in real time. This is 60% of Swift's banks running Ripple solutions. American Airlines confirming Ripple Treasury exceeded expectations across 13,000 connected banks. Russia passing crypto legislation enabling XRP as a BRICS trust layer. FedNow and Fedwire access potentially arriving in the next 2 quarters. Rakuten's 44 million Japanese users getting XRP integration. Ripple Prime functioning as the first crypto global multi-asset prime broker, a post-quantum cryptographic upgrade in active Phase 2 implementation. Price models from multiple independent credible sources converging on $500 plus before 2035, with serious arguments for 2028 timelines. Michael Arrington on record saying no upper limit if Ripple executes. The switch is being built, the rails are being laid. Every piece of this system is coming together at a pace that the current $1.40 to $1.45 price level simply does not reflect. Stay patient, stay focused on the rails, and remember, we are not waiting for the future anymore. We are building inside it right now. If this analysis changed how you're thinking about XRP, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the market.